Today, we're breaking down PSIL, the AdvisorShares Psychedelics ETF, an actively managed ETF designed to provide exposure to the emerging global psychedelics industry. This is a niche, thematic ETF focused on companies involved in the research, development, and commercialization of psychedelic medicines and related therapies. PSIL is actively managed, meaning it does not track a passive index. Instead, the portfolio manager selects companies based on specific eligibility criteria and growth potential within the legal psychedelics ecosystem. To qualify, companies must derive at least 50% of their revenue or devote at least 50% of their assets to legal activities related to psychedelic medicines and their derivatives, excluding cannabis. That exclusion is important. PSIL is not a cannabis ETF. Its focus is strictly on psychedelics and related therapeutic innovation. The fund primarily invests in publicly listed companies across the United States and abroad. Many of these firms fall into the mid-cap, small-cap, and micro-cap categories, which introduces both opportunity and volatility. Smaller companies in emerging industries can offer significant upside if clinical trials, regulatory approvals, or partnerships succeed. However, they also carry higher risk, including funding risk, execution risk, and regulatory uncertainty. PSIL aims to concentrate at least 25% of its investments in the pharmaceuticals, biotechnology, and life sciences industry group. That makes sense given that most psychedelic-related companies are developing treatments targeting mental health conditions such as depression, PTSD, anxiety disorders, and addiction. The therapeutic potential of compounds like psilocybin and MDMA has attracted increasing attention from researchers and investors, but it remains a developing and highly regulated space. In addition to investing directly in stocks, PSIL may use swaps to gain similar exposure. This allows the fund to efficiently manage exposure or access certain securities when direct ownership may be limited. As with many thematic ETFs, the structure can introduce additional complexity compared to traditional broad market funds. The advisor uses outside analyst ratings and proprietary stock selection tools to identify companies believed to dominate their respective niches or hold unique growth potential. Because this is an actively managed strategy, portfolio composition can change based on evolving industry developments, clinical milestones, and capital market conditions. Another notable feature is that PSIL has the ability to engage in stock lending, up to 33.3% of the portfolio. Stock lending can generate additional income for the fund, which may help offset expenses, but it also introduces counterparty risk that investors should understand. From a portfolio construction standpoint, PSIL is clearly a high-conviction, high-volatility thematic allocation. It is not designed to serve as a core holding. Instead, it may appeal to investors who believe in the long-term medical and commercial potential of psychedelic therapies and are comfortable with regulatory risk, early-stage company risk, and industry concentration. The psychedelic medicine industry is still evolving. Regulatory pathways, clinical trial outcomes, and public policy decisions will heavily influence the trajectory of companies within this space. As a result, PSIL's performance can be highly sensitive to news flow, capital raises, and scientific developments. The bottom line is this: PSIL offers targeted exposure to the emerging psychedelics industry through an actively managed, globally diversified portfolio of biotech-focused companies. It provides access to a cutting-edge healthcare theme, but it comes with elevated volatility and speculative risk. If you found this breakdown helpful, make sure to like the video, subscribe to the ETF Investor, and comment below. Do you see psychedelic medicine as a long-term growth opportunity? Or is this theme too early stage for your portfolio?